It is now time for the Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters, treasure hunters. Welcome, I'm Steve Rhodes, host of the Trader's Edge, and thank you so much for joining me. It is Friday the 13th. Are any of you superstitious out there? I know I'm not. I don't really think that you should, but it is Friday the 13th, maybe Freaky Friday, maybe Fun Day Friday. Maybe some of you are actually making this a 4-day weekend. Oh, God bless you for doing that. But for us folks, it is a fantastic Friday. You know, we start the day off, or I start the day off, with my favorite spot in the universe, which is really right here. But I certainly take myself to this spot here, right over my left-hand shoulder. This is my place of strength, my place of quiet, of peace. I guess they say peace and quiet, don't they? But it's absolutely a place that I love to be able to take myself, and there's nothing like visually surrounding yourself with those spots. You should do that as well. You should actually, in today's day and age with the internet, maybe multi-monitor systems, just the color printers. Heck, I was hearing about all these 3D printers that they've got out at the CES show. I'm going to turn this thing into a little 3D model. We'll put that right there. I don't know what's up with that, but that would be a cool thing. So, what we do, folks, hopefully you have had a great week and looking forward to a good weekend, some football. And right now you've got the markets in the last, 15, 20 minutes. I really wasn't paying attention. We're just getting set up here, and we've seen the euro take a dive. King dollar is up 56 ticks right now. It's that weekend time frame over in Europe. What time is it over there? About 2 in the afternoon. And maybe the currency traders are just saying they don't want to go home with euros. You've got the S&P off about 10 right now. You've got the Dow futures down 70 plus. You got NASDAQ down 10. And so what we're going to do here just real quickly, since the markets have, done a little bit of movement here, we're going to move off of my favorite spot in the line. We'll just take a look at some charts, and then maybe we'll get back to, what I really love to do here when we start the show off, is work on what our tactics, what our strategies are for 2012, because it was only a couple of weeks ago. But the most important thing is, let's make sense out of what's going on in the market. What I've got up here on my screen right now is the euro US dollar 30-minute chart here, and you can see really in the last, about 41 minutes or so, how the euro at 9 o'clock, and I don't know if there was some news event or anything out there, you can see how it started to move down, how it's truly retracing back into the area here where it had broken out, if you will, yesterday, right at about this time at 9:30, where it made its move up. And so right now you're making a move. You're really coming all the way back down here to the time frame of what looks like about noontime on January the 11th. Today's the 13th, so 2 days ago. You've got nothing but just simply a sheer coming off the cliff move here. No A to B equals CD down, just simply a straight retracement. Let's go take a look at this on some longer-term charts. Let's see what it is that we're going to do. It looks like the euro wants to go test my hammer out there. Let's see if we put this on the 120-minute chart. And why are we focusing so much on the euro? Because of the correlation that it's having with regard to our marketplace. And so if we take, because it's all about that dollar correlation. Now, if we go take a look at the 120-minute chart, we'll punch that up here, and what we're going to see on the 120-minute chart, so the last 2 hours, how we've had these wide, this one wide range bar as it moves its way all the way back into this hammer candle. Now, the top of that hammer is 1.26928. You can see, it was tested a couple of days ago. It was tested on about 8 in the morning or so. On the 11th, was tested again at about noontime. Again, this is a 2-hour daily chart 2-hour chart, if you will. How could it be a 2-hour daily chart? 2-hour chart. And so right now, it's just really testing the top of that hammer. Let's see, it looks like it's maybe gotten down to that area. Now, with it coming down with the wide range bar here, what that says to me is it wants to go back down and it wants to test that bottom again. So the low on that is going to be 1.26652. If it doesn't hold that hammer candle, then that means that the market is ready to move lower than where it's at right now. But I suspect that this will hold. This area here will hold. We'll see how it trades during the session. But that's where it's headed right now, is right here into this hammer. You can see that it's doing it. So we've got that pressure. If we come back and let's take a look at this now on a daily basis, always kind of zoom out, if you will. Well, on a daily basis, what this is telling us is we're inside that area where we've got those two planetary index dates, the August 25th and 26th time frame. Real important to mark that. The black line that you're taking a look at here, which is the 1.27350, that's been pierced, if you will, and that is the top of that area. With those two P index dates, the low of that is 1.25861. That would also make a move of a move. I'm going to go ahead and pull this chart out a little bit further so you can see this here and see where it is we're going. We're trading inside this swing point. It looked like we're going to move out of it. Now, the better test would be to get down to the bottom and test that area. Of course, you close below that, folks, and it will be sayonara, baby. And what I mean by that, if we just simply take a look at over on the left side of this chart, you really don't run into any kind of swing point areas until you get right down here in that 122 area. If we take our retracement tool, you know we love to be able to take a look at the sacred geometry that goes on inside these charts. That wasn't a very good start point there. Let's start that over, see if I can get X marks the spot right down here back in the June time frame. There we go. Looks like I got it all the way up to the top here. Which was in the May 4th area. And what you'll also see right down here at the bottom, just below that P index area, is that 0.786. Now, that 0.786 combined with, an ABC down, let's take a look at the different ABCs that we have here. We'll take a look at the longer one, which that is not going to complete at that 0.786 area. That's going back from the high of May 4th all the way down to the low that came in the October 3rd area. And you go, actually, okay, cool. And so on the larger ABC that we're looking at here, which is this blue line, the A to B equals C to D that we've got. This is nothing more than a retracement that we have here. And that retracement, if we take a look at it, is, let's see, how far did that retrace? Right about to the 0.618, almost perfectly. You got to love this sacred geometry, folks. So that retraces back to the 0.618. So what we have right underneath here is a heck of a lot of area of support. You've got those planetary index periods. You've got a 0.786 retracement just slightly below that. And then a little bit further below in that 124.5 area, you've got an A to B equals C to D. The thing that is most concerning, and you know it when we take a look at this chart, is taking a look at that angle on that C to D leg, because this is steeper. This has got more power, more thrust coming down into this area. And what that really suggests to us is that it wants to do more than a 1-to-1 A to B equals C to D. So that's where we're at on the euro. It's real important to be able to pay attention to that because of the correlation that we've got with regard to our markets. And, what's that correlation look like? If we just simply switch over to this chart, what you're going to see that's going on right now, these correlations, look, they don't last forever, but when they do last, they really can give you absolute clarity. You've got the blue line here. That is the U.S. dollar index. That is inverted, so that it becomes easier for you to be able to see the direct correlation nearly tick for tick. The red line is the ES mini. That is the S&P futures contract. I've got this on a 5-minute chart, if you will, and that way, you're able to see the tick for tick movement, if you will. So you can see that the correlation is there. It exists. We've been pointing this out for weeks. Heck, Tom has been pointing it out for a heck of a lot longer than that. And so so you got that correlation. That's why it's important to be able to take a look at the currency market, take a look at the euro, because it is 68.5%, I believe, is the exact number of the U.S. dollar index. And so that's what we've got going on in the euro. If we go take a look at the dollar index chart out here, this is the continuous contract that I'll go ahead and punch up on the screen here. We take a look at the continuous contract. What you can see is quite a move. So I've got two different daily charts out here. Let's punch this one up first, then we'll come back to the other one. So on this daily chart here, what I'm showing here is you can see this uptrend that the U.S. dollar index is in. You can see we're over the 1-to-1 move of a move coming back here to the swing point on October 4th. And in fact, what you can see here are all the bullish candles during any kind of a pullback that we've had here. You've had this Three Rivers Morning Star, if you will, that started everything off started everything off in the October 28th time frame. Moves up, pulls back, creates a bullish sash. that encompasses 5 candles. You move up, pull back a little bit. You get a bullish engulfing that encompasses 1 candle. You move up, you pull back a little bit. You've got another, and you move sideways, actually, is what you do. You've got another bullish engulfing candle. That took place on January the 4th out there. Real important to take a look at these candle patterns. And what are we doing today? Looks like we're making another bullish engulfing as well. Pretty wild stuff. So you can see the uptrend that we're in. If we go take a look at the other daily chart that we've got out there, just to give us a little bit of a roadmap as to where the dollar index has been traveling, what you'll see here is you'll see this channel line that we're in. You will see that we've made basically a 3 drive to a top pattern as well. We completed an A to B equals C to D. And what we're doing right now is we're just simply testing out that area. So we'll see if this area is going to hold. But we know what the points are for us to be able to take a look at, to be able to plan our trades. You had J.P. Morgan was out earlier with the earnings, and let's see, where is that trading? Right now, you've got that trading out at about 35.44, closed out at 36.85. 877-927-6648. We'll be right back, folks.
Well, it's always better when we're together. Yeah, it's always better when we're together.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
In 1929, Joe Kennedy had $4 million. By 1932, he grew it into $180 million. All this during the Great Depression. The good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time has been spent in recession. How would you like the strategies that are bulletproof against the turmoil of our economy in these fast-changing times? For the last quarter of a century, I've studied and used the secrets used by millionaires and billionaires. These are bulletproof strategies that will absolutely astonish you. I'd love to introduce you to these concepts that will absolutely change your life. You'll learn the 3 ways to grow any business exponentially. I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien and host of the Trader's Edge, both seen daily at TFNN.com. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com, look under Breaking News, and click on the Get Steve Rhodes Special Report link, and I'll email you this free report, Pathways to Wealth.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back. 877-927-6648. Futures still off. Dow down about 81 points or so. S&P's off 10. NASDAQ off 13. And what I do have up on my screen right now, as you take a quick tour around the world, is the DAX, if you will. DAX right now trading off about 38 points. You can see it was up as high as, let's see, the DAX got up to 62.45.30. This will be closing at 11:30, so it'll be very important to watch where the DAX closes here. You know, what it's trying to do, it's trying to stay above the swing point. That's that red line that I've got coming across the right-hand portion of my screen. That's the December 5th swing point. The high there was 61.70.04. It's going to be important to watch this, how the DAX closes. It's going to be a pretty decent leading indicator to us as to what's going on in our marketplace, because this could be creating a little bearish engulfing candle out here up at this move. That would indicate that the DAX then is ready to do a retracement. If the DAX does decide to do that, if that's how the markets do trade today, then what we'll see here is we'll see the DAX then start to retrace back to the 0.618 area. That would make sense, because that is where, when we came back on, of course we didn't come back, but when the folks in Germany came back after New Year's Day, if you will, they came back on January 2nd. The market exploded up 175 points. I think there might be a little gap out here. Let's see. So on December 30th, the high was 58.98.35. And then the low was 5,900. So there is a little bit of a gap out here for the DAX to close. So that would make sense that the DAX would trade right down there. That would be normal. Of course, you'd be watching those wide-ranging bars. And quite frankly, if that August 25th, 26th area doesn't hold, you know, it's going to move further down in the euro, we're talking. Going to move further down to either where the A to B equals C to D, or that 0.786 area, and that'll be enough energy to at least get the DAX to move down to that area. You had Asia was up last night. You had the Nikkei up 114 points. Let's take a quick look at the Nikkei out here. Where is she? Here's the Nikkei. Of course, this is a wonderful chart. You've got nothing but gaps all over the place on this index out here. So the Nikkei just simply moving up, some pretty decent conviction. Looks like it was trying to get up towards that January 4th area. You had the Hang Seng was up 109 points as well there. Let's go take a look at the Hang Seng. Where is she? Hang Seng right here. Now the Hang Seng, closed up towards the top of its session here, and what the Hang Seng is doing is going after its December 7th swing point. The high out there, 19,240, closed out at 19,204. It got up and over that area yesterday. Today it didn't have enough juice to get up and over. It did close towards the high. Now, we're closed on Monday, meaning our markets here are closed on Monday. Europe is open. Asia is open. So we come back on Tuesday. There's going to be some energy built up. So it's going to be important to watch how today's action unfolds, what kind of candle patterns it leaves for us, how things are handled at swing points, just simply to be able to give us an idea of what's going on. What we've had for days, we've had days here where looks like the markets are just going to push down and crush down, and it just keeps crawling back up and crawling back up. This is the slow crawl, if you will, just to try to go ahead and complete these patterns. You would expect this type of turbulence around because of the areas that we're in. In fact, let me just go and pull up the index. Why? Because what we're doing is, especially with the S&P, where you've got the breadth of 500 stocks out there, you've made a move of a move, if you will, going back to that area that we've been taking a look at, that October 27th high, which was 1292.66. We got up and over it yesterday. For the last couple of days, we've been trading in this area, and so it's just trying to create enough energy to complete the small A to B equals C to D. I think it's also trying to get up here to try to complete this 1.272 expansion off of that October 27th area. But, you know, it's all going to be about the correlation of what's going on inside the currency markets. They will give us a great indication as to where this is going. If we take a quick peek here, let's go take a look at the ETFs that are out there. And the reason, you know, you're making this move of a move, if you will, you're trying to finish these patterns out here. If we pull up the SPYs, because the SPYs did just barely close over the high. The high on October 27th was 129.42. You closed at 129.51. Of course, you had 389 million. You were going into that yesterday with 119 million, almost one-third the volume. But, folks, so we'll see how this is going to play out here. 877-927-6648. We get back, we'll see how the markets are going to pop or drop. Well, they're not going to pop right off the bat. We know that. We'll be right back, folks.
Well, it's always better when we're together. Yeah, it's always better when we're together.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
Homeowners, did you know a burglar could break into your home and get away in just 5 minutes? A locked door may not be enough to keep a thief out of your home. Think about what you can lose, and then think about this. Now you can get a free security system monitored by ADT, the leader in home security. Pick up your phone now and get free hardware, free medical and fire alert, and free activation. It's an $850 value. Just call Protect Your Home, your authorized ADT dealer, at 1-800-949-8207. You'll get 24-hour protection, and there's no cost for parts or activation. So call now about a free security system monitored by ADT. Call 1-800-949-8207. $99 installation charge. 36-month monitoring agreement at $35.99 a month. Call for terms and conditions to this offer and protect your home license numbers. Call now. 1-800-949-8207. That's 1-800-949-8207.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Off to the races. You got the Dow charging down 110 points right now. S&P's off 11. Composite down 21. Small caps down 8. NDX off 15. New York Stock Exchange down 81. And everything looks relatively red on my charts here, with the exception of, well, let's see. If you take, not the exception of King Dollar, if you will, and then obviously a couple of those inverse ETFs. What I've got up on my screen here, so let's take a look at what's going on from a sacred geometry standpoint. We're going to take a look at the SPYs. We're going to just take a look at several different charts. So we'll dig down, we'll dig up just to see where we're at. And so you can see we're at the SPY, where it opened today. And this is a 30-minute chart. So you've got some volume kicking in because we've only been open for 5 minutes. And the Dow, the SPYs have already traded 6.5 million shares. And where it opened at the 0.618 retracement of this is a 30-minute chart again, at the 11:30 time frame on January the 9th. You can see here, hopefully you can see this on TigerTV. In fact, hopefully you're watching on TigerTV. Maybe it's on your iPad, your iPhone, your iDevice, your Google device, your Android device. It's a great way to be able to learn and educate, especially a day like today, because we're able to show you these geometric sacred geometry areas and show how they act as resistance when they fail, where the next levels are that they'll go to. So what you had happen this morning is you opened up really right at the 0.618 on a 30-minute chart. You also opened up at a 0.382 retracement going back to January the 5th at the 10:30 time frame. So you've got those two areas, 0.618, right? We talk about there's only really, let's say 5 or 6, okay, 5 or 6 sacred geometry numbers that you want to be able to learn and understand to be able to measure fear and greed going on between swing points. You want to understand 0.382, 618, and 786. Those are your retracement areas that we take a look at, that I take a look at it. From an expansion standpoint, what you want to look at is 1.272, 1.618, and every now and then 2.618. There's others out there. There's pi, for example, 3.14. Sometimes there's lemon meringue pie or Boston cream pie. But we don't talk about, you don't see the pie expansion, if you will, that much, other than right down here in the gut where you don't want to see the expansion. But so those are the numbers. Those are the 5 or 6 numbers, contraction and expansion numbers that you want to take a look at. And important to be able to see how it opened right there, that held as support at the moment. That's on a 30-minute chart. Let's go up another time frame. Let's see what this thing looks like on a 60-minute chart here. Let me go ahead and turn on the tool that gives me my measurements, if we will, of what's going on. You can still see we're still making higher lows here on this chart and higher highs. So that's obviously a bullish trend, if you will. In this case here, you would take and on a 60-minute chart, you would be looking at this expansion here. It's got 1.17. Well, 1.272 was the one that we were talking about. You're going to see that there's not a substantial difference as far as the price spread. That's really your range, if you will. The 1.272 would have taken the SPY right down to 128.20. Where it got down to when it opened up, it got down to 128.32. Folks, that for 12 cents, that should be good enough for your work. So we also have that point 1.272 on this longer chart here, the 60-minute chart. It shows 0.57. That's close enough for 0.618 for the type of work I did, or I do, if you will. And let's see, from a volume standpoint, this, again, 60-minute chart. Let's go up one more level, then we'll start digging down, if you will. So let's go up to the 120-minute chart, see what it is that we've got out here on the 120-minute chart. Nothing different there. Real quickly, let's go down. Let's go down deep, if you will. Let's take a look at the 5-minute chart. Looks like we might have to wait till we get back from break on that. 877-927-6648. We'll be right back, folks.
Look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
In 1929, Joe Kennedy had $4 million. By 1932, he grew it into $180 million. All this during the Great Depression. The good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time has been spent in recession. How would you like the strategies that are bulletproof against the turmoil of our economy in these fast-changing times? For the last quarter of a century, I've studied and used the secrets used by millionaires and billionaires. These are bulletproof strategies that will absolutely astonish you. I'd love to introduce you to these concepts that will absolutely change your life. You'll learn the 3 ways to grow any business exponentially. I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien and host of the Trader's Edge, both seen daily at TFNN.com. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com, look under Breaking News, and click on the Get Steve Rhodes Special Report link, and I'll email you this free report, Pathways to Wealth.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. Let you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by South American Silver Corporation. For more information, just click the South American Silver Corporation banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. 877-927-6648. You got the Dow off 118 points. S&P's down almost 12 right now. You got the composite down 28. Small caps down 7. And let's go take a tour around the 9 different sectors inside the S&P 500. That's what I've got up on my screen here right now. You've got all different 9 sectors. So you've got the utilities, the energy, consumer discretionary, technology, consumer staples, materials, healthcare, industrials, and the financials. So let's go take a look at the financials. J.P. Morgan, came out with earnings today. And right now you got J.P. Morgan is trading down $1.12 out at 35.72. And if we take a look at the financials, now the financials during this leg up, since we've come back from the New Year's Eve fireworks, and folks, we got fireworks all the time usually around here, and that's a good thing. I don't want you to be scared, with regard or frightened of the market. There's a lot of folks have stayed out of the market, have stayed out of the money game because of fear. And, what I'm here to do, what I'm here to help you to do is to absolutely blow past that fear. Because, you can make money in this game when you understand the little tricks that are out there. I absolutely going to teach that to you, whether you're a client of mine, whether you're listening on the show. And it's just so important because when you take a look at the importance, and I'll talk about it more during the show, during the next show, the Money Master show. I think Tom won't be here today, so with regard to the markets, the way that they were acting, I thought it was more important, really, as opposed to take a look at the stuff that I really, I love everything of life. Really do, but was to really focus on the markets here for you. So we're going to continue to do that. We're taking a look at the XLF. You can see here, XLF, let's see, is trading down 23 cents out at 13.68 right now. And with the XLF, it's got this little gap up here. So this is going to be important to take a look at how these 9 sectors, I think most of these sectors have got these gaps when we came in here. So you've got the gap from the January 9th time frame to the beginning of this week. The low on that gap, let's see, from January 10th, the low there was 13.62. You then had 13.60 on the 11th. Yesterday, you were moving up with some volume inside this October 27 swing point. You see, it just doesn't want to let go. At least it doesn't want to let go right now. The bottom of that swing point is 13.68. You're trading right now at 13.68. You got to love that. And so it's going to be important to watch if the XLF can hold this area. Let's see, did it get down below 13.60? Got to 13.61. Now already you've got 11 million shares in the first 15 minutes of trading. What did we do yesterday? 76 million shares. So you're definitely getting some volume in here. Now the question is, the volume that is coming in here, folks, are these people buying some portion of the dip because it's already the second week of the year and the money that's maybe on the sidelines? Are they just simply looking for a place to try to take a stake and maybe help the XLF move up and complete its pattern, which would be right around here at that 1481 area? That would be a beautiful thing, so we'll see how that trades out. If we go down and dig down just a little bit further, let's see what kind of damage, what kind of sacred geometry might be out there from a number standpoint. So look at the XLF. You got to love this. Yesterday during the close, you closed out, this is a 5-minute chart. You had 9 million shares close out in the last 5 minutes of the trading session. As we have come down, you came down here at the open at 4.2 million shares. Now you've had 1.4 million shares from 935 to 940. Up to 945, you're doing 2.8 million shares, and this thing's trying to claw its way back. Let's just take a look on the 5-minute chart for what else is it that we've got out here. Oh, how about this? We were coming right in to this. Now, that wasn't that swing point right there. Let's take this back a little bit further. Looks like right here. Let's see, where is that? Now, that was at the close as well. So at the close on the day of January 10th, you had 9.2 million shares. We're going to see if those folks were holders in the XLF and if they're going to go ahead and push the XLF, push the financials up. If that happens, folks, the financials have actually kind of been one of the leaders, if you will, in the sectors with regard to this move that we've had up here. Let's take a look and see what kind of sacred geometry. I did say that before and I didn't hit the button. See what we've got going on out here. Nothing that really pops in off the screen on the 5-minute chart. Let's take this thing out a little bit further. Let's go take a look at a 30-minute chart here. And on the 30-minute chart, let's take a look and see if we've got any other swing point geometry going on here. Well, so you've got a 618 retracement really coming off of this area right in here. This area, folks, I'm talking about the 1 o'clock, January 9th type time frame. And I say that, watching the XLF is going to be really, really important, throughout the day. We'll certainly continue to keep checking back on that. But what it looks like it wants to do is we back right out to the daily chart, just coming down and trying to tease us a little bit and doesn't have enough strength. If it doesn't have enough strength today to close that gap, that's going to be sending us a signal. That's going to be sending us a signal that come to work on Tuesday, there could be some energy that is built up and the market could, we're going to likely see a gap on Tuesday when we come back because you've got trading going on overseas and there's going to be energy built up and, we're having gaps on a normal basis. So imagine when you've got an extra day here. So the question is, in the case of the XLF, are you going to gap up and finish this pattern out here? The pattern, folks, I'm talking about, this would be a Gartley sell. This is a daily chart, so you've got great sacred geometry out here. You've got a 0.618 retracement off of the highs coming back here to February 2011. You've got an A to B equals C to D. We know that it's this October 27th swing point that is so key. If you continue to close inside these, and this, in the case of the XLF, was pushing up with some volume, says it wants to at least go back up to the top and test that. But when I take a look at patterns that are out there, ideal patterns, this would be a beauty because you got a 786 retracement down here at the bottom, a 618 up at the top, 1.272. Folks, I'm giving you the possible trade from a short standpoint. That's if the XLF can close today back inside that swing point down there at 1368. Let's go see what else is going on inside these sectors here. Let's take a look at the XLK. And we'll do that when we get back, folks. 877-927-6648. We come back, we'll go take a look at the XLK. If not the XLK, it'll be because you called me to ask me about a stock you'd like me to look at. We'll be right back, folks.
Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while actually reducing your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns, making missed opportunities a thing of the past. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the fourth quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. 877-927-6648. Dow's off about 94 right now. S&P's down 8. Composite down 13. And before we went to break, I said we were going to go take a look at the XLK, but I remembered there was a chart that I can't recall. I think we covered it during the first hour yesterday. I'm pretty sure we did. EC is the symbol on it. And what I was showing you was really how we had 2 patterns that intersected with each other. The yellow area there is what we call a butterfly pattern. Look at that beauty. Just step back and take a look at that art, folks. This is math creating art, if you will. And so you had a 1.272 expansion butterfly pattern, and where that was intersecting with was a Gartley. So this is a butterfly cell pattern. This is a Gartley. The light blue area underneath this here, it would be light blue as well. And so this is a Gartley cell pattern. So you had a Gartley cell lining up with a butterfly cell pattern. Really beautiful. Now, what I said yesterday is this is not a trade. Even though it's a cell, I would not take this as a short trade. And the reason was because of this high volume support candle that is out there from September the 16th. And go back and listen to the replay. Now, what did it do yesterday? Because of the way that these patterns work, it did what it was supposed to do. In fact, it's done what it's supposed to do today. You know, you can see how that pattern completed. We pointed out even before the market opened, I'm pretty sure. And you can see yesterday came off with about 997,000 shares. What does it do this morning? Gaps down to where? Well, let's take a look at the top of this high volume candle right here, which is only going back to September 16th of 2011. The high there, $46 even. What does it get down to this morning? Are you looking at my screen, folks? Am I seeing things or what? $46 right on the button. So, you know, came right back down to that support area. Wasn't a good enough reward to risk. It did look like to me, because of this volume that was in here and the way that the market seemed to be. Well, look, I know that there is money flowing into these markets. We're not seeing huge volume come in here, but money is flowing into these markets here. And so EC, you want to pay attention to this. We'll continue to certainly watch this stock and watch this pattern. Why? Because I want to be able to teach you something. This is a great one. What I was showing you, what I was saying was, the better setup would be, and this is where you've got to be patient. And it's so important to be able to utilize these patterns here as far as advanced indicators, because you can set the trades up ahead of time where you've got where you've been out there fishing and you've got the best odds in your favor. The best odds because of these patterns, because of the sacred geometry. Well, there is a pattern that is out there. Let's take a quick look at that in 3M. That would be MMM is the symbol. And what we're taking a look at here is we're taking a look at a 1.618 expansion. That would be here. That's a really nice butterfly. Boy, when you've got a 1.618, just imagine the energy that's built up there. And that would be coming into a 0.786 Gartley cell. So you've got a 1.618 butterfly cell, a 0.786 Gartley cell. And where does that thing come up to? And I don't make this stuff up. This is actually just beautiful. This comes up to where 3M actually gapped down. It did that on July 26, 2011. You got, decent volume right there off of that gap, 11.4 million shares. What you'd really love to see here is let 3M creep all the way up to 92.85. Let it do that on light volume. In fact, let it get one tick above 92.50. Close back below it, and then, folks, you would be taking a look at pulling the trigger. Why? Because when you start taking a look at where can this thing pull back to, you start taking a look at these volume areas. Well, first, where does a normal pattern like this pull back to? Sweet 618, of course. And if we just simply go ahead and take a look at this, that says that it would pull back into that 77.84 area. What do you have at 77.84? You've got some volume candles, folks, just like we were looking at with EC. It's been great to be here. Stay tuned. I'll be up next in about 8 minutes doing the Money Masters show solo, but you can join me. We'll be right back, folks.